Michael Hartnett, the chief investment officer for Bank of America, or come out and say, sell. You should have 25% stock, 25% bond, 25% short-term treasury, 25% precious metals. What? Bank of America say 20, and now they're saying silver could go to 309.
I know, I've seen that.
Yeah, or the chief investment officer of Morgan Stanley is saying, sell half your bonds, that 40% of the 60-40 portfolio that Wall Street has adopted for 50 years, and buy 20% metals. Or Jeffrey Gundlach, the bond king, who's made his living and his fortune and his nickname by selling instruments that pay interest, saying a 25% interest in metals is not overvalued.
Leading Wall Street strategists are increasingly warning investors to rethink traditional portfolios. Bank of America CIO Michael Hartnett has openly discussed radical diversification, floating allocations such as 25% stocks, 25% bonds, 25% short-term treasuries, and 25% precious metals, while BofA analysts have even suggested extreme upside scenarios for silver. Morgan Stanley's CIO has urged cutting bond exposure and reallocating heavily into metals, echoing Jeffrey Gundlach's view that a 25% metals allocation is not overvalued. Precious metals expert Andy Schectman reinforces this shift, highlighting growing systemic risk, debt expansion, and gold and silver's role as monetary insurance in an unstable global financial system. Now, we present the clips from Andy Schectman's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
Where they're posting a constant $5-6 spread between New York and China, where they are incentivizing the traders, the big traders, to buy paper in New York and sell physical in China to, in essence, capture that arbitrage. And what we're doing is we're playing right into their hands, and that silver won't come back. So you have that. You have so many things where you have a global rush. Now, so you have at the end of 23, the European Union says silver is a critical mineral. In November of last year, China issues a memo saying, yeah, we're going to prioritize domestic ownership of silver for our own people. Then we come out and say silver is a strategic metal. And then they say, well, we're going to limit exports. Well, this is not about two brothers like the Hunts trying to corner a market. And the interesting thing is it's the same situation. The Hunt brothers noticed that there were more paper contracts than there were bars behind it. So let's buy the paper, stand for delivery. Well, and the exchange does what the exchange always does. They change the rules or modify the rules, kind of like they're doing here and going right after the longs. Well, that ain't what this is about anymore. This is about some of the biggest, most well-informed money in the world that is making a rush to accumulate a metal that is finally being admitted as strategic, not just industrial, and arguably worth more than the dollars used to purchase it. And what started out very quietly is now beginning to take notice. And the funny thing about this, Ivan, with all of the performance of silver blowing everything away, where the hell is the mainstream media? Where is the integrity of anyone in the mainstream? Not only talking about what silver has done, but how about the fact that we are seeing billions upon billions upon billions upon billions upon billions coming into COMEX every single month? And where the hell are these idiots like Jim Cramer or any of them on CNBC or Fox saying, something's going on COMEX because whoever is doing this to the tune of billions of dollars, well, that's not your little trader. These are the most sophisticated people in the world who don't do this for the heck of it, right? I'd like to be a little bit more profane, but I won't, because I just want the point to get across here that that's all you need to know. I mean, before that, all you need to know is why did 8 Western banks hold the largest concentrated short position of any commodity ever traded on the 1,000+ commodities on COMEX? Why in silver? Why? Right. And that has to do perhaps with the military-industrial complex, and that's another discussion for another time. But when you see the biggest traders in the world doing these things, seeing what they do, and getting zero attention by the mainstream, you should be very keenly interested in exactly what they're doing, because it's front running, and either you see it and choose to trust it or you don't. And I think that's exactly what is happening right now. I think it tells you that we have not seen the end of this bull market for a long time with the amount of money coming in physical metal into the COMEX. In terms of vindication, and it's not what it's about, but we've been right. And it's about time that the Main Street admits that they were wrong. And maybe that's what you're seeing when you see Michael Hartnett, the chief investment officer for Bank of America, or come out and say, you should have 25% stock, 25% bond, 25% short-term treasury, 25% precious metals. What? Bank of America say 20, and now they're saying silver could go to 309.
I know, I've seen that.
Yeah, or the chief investment officer of Morgan Stanley is saying, sell half your bonds, that 40% of the 60-40 portfolio that Wall Street has adopted for 50 years, and buy 20% metals. Or Jeffrey Gundlach, the bond king, who's made his living and his fortune and his nickname by selling instruments that pay interest, saying a 25% interest in metals is not overvalued. There is a sea change, but it's happening, Ivan, way up here, and it's not filtered down yet. And that's why people have such a hard time getting it, because they can't see it with their own eyes. It's happening at higher levels, and our media isn't talking about it.
A global silver supply shift is unfolding as China, the EU, and the United States officially recognize silver as a strategic metal, not just an industrial commodity. Persistent arbitrage between New York and China is draining physical silver from Western exchanges like COMEX, while exports face tightening restrictions. Massive institutional money is quietly standing for delivery, signaling a long-term bull market. Despite billions flowing into physical silver, mainstream media remains silent. Wall Street insiders are taking notice. Bank of America, Morgan Stanley, and Jeffrey Gundlach now advocate large allocations to precious metals. This elite accumulation suggests silver's revaluation is far from over. Let's get back to the interview.
Started with the massive purchasing of gold and silver by the central banks. India, huge silver consumer, but deeper than that, Saudi Arabia taking big interest in silver. China, the number 2 producer in the world, flying all over the world to, in particular, Peru and Mexico, buying pre-refined silver in doré and concentrate, paying double what the West will, shipping it back to China to refine it. The central banks buying tremendous amounts of gold and silver, but removing them not only from the exchanges, removing counterparty risk, standing for delivery, but even taking their metal back from the New York Fed, which always gave access to the COMEX, and from the Bank of England, which gave access to the LBMA, an overriding theme of accumulation and repatriation and removal of counterparty risk by the most well-funded, but more importantly, well-informed traders in the world. Now, if we take that a step further, whoever got to President Trump and said, dude, if we don't bring this back, if we don't get in this game, we're in big trouble. And we've seen that now for 14, 15 straight months. We've seen massive deliveries. In December, there was 64.73 million ounces of silver issued and stopped, which basically means delivered. Doesn't mean left the facility. A good amount did leave the facility, but what it did mean was that there are huge amounts of interest that are bringing in the real metal instead of the continuation of the paper promises. That was the largest ever 1-month delivery of metal in silver into COMEX. And then we look at it here. Just in the first 3 days of the January contract, second, third, and fourth, we saw, what was the number here? First 3 days was a huge amount. Sorry, I don't have it at the tip of my fingers. But I believe it was somewhere in the neighborhood of, by the way, 62,875,000, December delivery, 62,875,000 ounces. Now, in the first few days of the January contract, we see, where the hell did that go, Ivan? Somewhere in the neighborhood of 18 million ounces of silver stood
just in the first 3 days.
In the first 3 days. And so, the biggest money in the world, and somewhere in the neighborhood of about 600,000 ounces of gold in the first 3 days. These are billions of dollars of both gold and silver standing for delivery in 3 days, but repetitively every single month since a year ago, November, these people know what's coming, and they're front running the public, and they're standing for delivery in massive amounts when it used to be exchanging of warrants, not as much metal moving. There's a good deal moving now. And that, to me, you're talking the most well-informed traders in the world see something that the public doesn't. The amount that you had to have was about $21,000, I think, for a COMEX contract of 5,000 ounces. Put that at $70 or whatever, you're talking, what, $350,000 worth of silver is controlled with 21,000 margin. So you buy these traders who go deep on leverage to take advantage of this massive uptrend in silver. Now all of a sudden a 30% hike, you have to immediately post, instead of 21,000, you have to post about 27,000. And if you don't come up with that money, your position is liquidated. And this is how they knock the wind out of the levered traders. They specifically target the longs. So these longs will have to sell some of their contracts, let's say, if they have a whole bunch of them, to cover the margin on what they can afford to keep that selling, and the rising of the margins begets more selling, and it starts to fall down. It's called shaking the bushes. And the big money, who's been standing for delivery, who's not on margin, stands there and pickpockets all of this silver at subsidized prices. The big banks are the ones that have the book of where all of these hedges are put on, and the entry points and the pain points. And it's kind of like a house in a neighborhood, a gated neighborhood, where the houses are $50 million each. Those people who buy those houses don't care about mortgage rates. But in the areas where everyone's on mortgage, yeah, those house values are going to crumble. It's the same thing here. The big traders, the Tesla, the Samsung, the Sony, the photovoltaic solar panel makers, the sovereign wealth funds, the governments that are standing for delivery are not using margin.
A historic shift is underway in the precious metals market as central banks and sovereign entities aggressively accumulate physical gold and silver. China, India, Saudi Arabia, and others are removing metal from Western exchanges, repatriating reserves, and eliminating counterparty risk. Record COMEX silver deliveries, over 62 million ounces in a single month, signal that the world's most informed capital is rejecting paper contracts in favor of real assets. Margin hikes are shaking out leveraged traders while institutions stand for delivery without leverage. This is not speculation. It's strategic positioning. The scale and consistency of accumulation strongly suggest the silver bull market is far from finished. Share your thoughts on his analysis in the comment section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.